The UK has long been one of the most vibrant startup ecosystems in the world. From fintech hubs in London to fast-growing health tech, AI and sustainable energy startups across Manchester, Edinburgh and Bristol, the UK is a breeding ground for innovation. With government support, an active investor community, and strong connections to European and global markets, there's no doubt about the fact that it's a great place to launch a business. But even though it's an objectively good place to launch a startup, especially compared to other destinations around the world, building a successful startup takes more than just a good idea, no matter where you are. You need capital to get things moving. Whether you're bootstrapping a prototype or scaling your first team, securing the right kind of funding can be the difference between growth and stagnation. Fortunately, there's a broad mix of options available in the UK, from private investment to government-backed grants. Here's how to navigate the process and give your startup the best chance of success. Before reaching out to investors or applying for grants, you need to make sure your business is in good shape. That means more than just having a clever idea. It's about proving that you can execute it, and you need more than just confidence. Starting with the fundamentals, a solid business plan, market research, and early signs of traction. Even the smallest of wins help. Investors in the UK typically look for a strong founding team, a clearly defined market opportunity, a realistic plan to scale. It's also worth having your financial forecast ready. Even if they're early stage estimates, showing that you understand your numbers goes a long way in developing investor confidence and showing that you understand what's going on and how it all works. Make sure your legal structure is clear too. If you're raising equity investment, you'll likely need to register as a limited company with Companies House and have shareholder agreements in place. Investors also tend to favor businesses that qualify for the SEIS or EIS tax relief schemes, so it's worth checking your eligibility early on. A good pitch deck is one of your most important tools when raising funding. It needs to tell your story clearly, confidently, and quickly. It's your first impression to potential investors after all. In the UK, investors expect a concise, well-designed deck that covers the essentials: problem, solution, market size, product, business model, traction, team, financials, and the ask, how much you're raising and what it's for. Keep it simple, no jargon, no fluff. It's often said that you've got less than 30 seconds to grab attention, so open strong. Show the problem you're solving in real terms. Back it up with UK relevant data or customer insights. If you've already launched, show what you've achieved. If not, focus on the opportunity and why now is the right time. Don't forget to tailor your pitch slightly depending on who you're talking to. What a VC wants to see might differ from what excites an angel investor. The UK offers a healthy mix of funding sources, but knowing where to look can save you a lot of time. And if you're running a startup, saving time is going to be super helpful. Angel investors are a common early route. Networks like the UK Business Angels Association can help you connect with individuals who invest in startups at the pre-seed or seed stage. You can also find local angel groups based in specific cities or sectors. Venture capital firms tend to come in at seed or Series A level. London has the highest concentration, but firms across the UK are increasingly active. Check out funds like Octopus Ventures, Seedcamp, Local Globe, or Scottish Equity Partners depending on your stage and your sector. You can also explore equity crowdfunding platforms like Seedrs or Crowdcube, which are popular with UK startups looking to raise from the public while building a customer base. And don't overlook accelerators and incubator programs. There are loads of accelerators and incubators in the UK, including the likes of Techstars London, Entrepreneur First, and Barclays Eagle Labs. So make sure you look into that for the sake of funding, mentorship, and other resources. The UK government offers a wide range of grants and funding support for startups, with a specific focus on those working in tech, science, or sustainability. Innovate UK is one of the biggest players here, funding everything from feasibility studies to large-scale research and development projects. Grants are competitive, but they can be a great way to develop early-stage ideas without giving up equity. You should also look into R&D tax credits, which allow eligible businesses to claim back a portion of their development costs, even if you're pre-revenue. The British Business Bank also runs loan and equity programs aimed at helping startups access finance, often through partner institutions. Start early and build relationships before you actually need the money. That means before you're desperate and nearing day zero. Investors are more likely to back founders that they know and trust, so keep people updated as you grow, even if you're not raising just yet. Be realistic about how much you need and what you're offering in return. UK investors are often more conservative than their US counterparts, so focus on building a credible growth story rather than chasing sky-high valuations. Finally, be persistent. Rejection is part of the process, and funding rounds can take longer than expected. Keep refining your pitch, stay open to feedback, and don't be afraid to try multiple routes, from grants to angels to crowdfunding. You'll need a thick skin to run a successful startup, and even thicker skin if you want to successfully secure funding.